So here we are, we're in December, Santa's almost here, and I'm going to talk to you today with a special guest, Simon Pomfret from Iris Research. Welcome.
Hey, Andrew.
I'm very
Merry
good.
Christmas, mate.
Hey, Merry Christmas to you. Look, I really wanted to talk to you each month. I do a How's the Market video, and I really wanted to talk to you particularly because you're with Iris Research and you deliver your quarterly reports on the Wollongong market. So what I'd like to really give my listeners out there is a good snapshot of the Wollongong market, particularly year to date, as in what's been happening in Wollongong, both sales and rentals and things like that. So let's start with your maybe overview of the Wollongong market and say property prices and things like that.
Okay, I think the last 6 months we've seen some buoyant times compared to the previous period. Certainly we're not getting the price increases that we've seen in Sydney, but over the last probably 12 months the median price has gone up about 3%. So a median house, say in Wollongong, $450,000 now. 12 months ago it was about $435,000. So there's about a $15,000 rise in terms of the median price, and that's also been reflected in the Shell Harbour market as well, and also down in Kiama. So we're not seeing sort of a huge increase, but there has been some steady growth there. And over the last 6 months we've certainly seen an improvement in the sales volume. As people have been a lot more interested in the last 6 months. Interest rates now are very low. People have realised they're probably not going to get any lower. Excuse me. So it's about time to get in there in terms of purchasing, and we've seen some buoyant times, and I know some anecdotal evidence from real estate agents. They seem to say that things have improved considerably over the last 6 months.
Sure. Okay, so what do you think's been the major influences? So you mentioned obviously interest rates. So what do you think has really happened in the last 12 months? Because I agree with you, this time last year was totally a different market. You know, we were more or less saying that, you know, price is critical, days on market were a lot longer, and a lot of owners were really stressing out at this time because, as you know, the real estate market sort of comes off the boil, and we had a lot of properties on the market this time last year. So what do you see as the major influences now? Why is there such a, I guess, a rush on?
I think it's just pent up demand. I think over the last few years there's been this build up of activity in terms of people were thinking about doing it but just hadn't sort of gone ahead because they were concerned about job security, interest rate directions, and what was happening with the national economy. I think we've realised now that things are probably not going to get any better in terms of the national economy. I know we've had some isolated shocks down here. We had BHP over the last couple of years in terms of BlueScope downsizing. Coal mining is now sort of having a bit of a problem. So there was those concerns, particularly last year with job security. I think people are saying now, well, I've still got my job. I'm part of, you know, the core part of that business. So now I feel a bit more comfortable and a bit more confident to go out there and buy, and I think that's what we're seeing. The other thing too, I think investors. I think a lot of it is being driven by the investor market, and I think they're seeing now that there's some strong returns because they're seeing prices starting to go up. We don't like to see prices really take off, but I think increasing property prices are very important for the overall well-being of the economy, because it does encourage investment, you know, whether it's internal people coming in from outside the region as well. So I think there's a number of things there in terms of pent-up demand. Investors are getting interested again because they're seeing prices rise. The interest rates certainly they're not going to get any lower than what they are now, and I think people are a little bit more confident in their job security.
Gotcha. So I guess what I take from that is this time last year, I mean, literally we were thinking the sky is going to fall again, particularly when you hear outside things with Europe, with America and all those sorts of things. So I guess what you're saying is everyone's kind of in that fearful state. They've been sitting on the fence, and sometimes when you're deliberating over something for so long, it just causes isolation, so you kind of just stay still. And now they're realising that, hey, the sky didn't fall, things are okay. It looks like you said, it's not going to get any worse than what it is. If anything, with interest rates being so low, it's kind of positive. So now they're all coming in at once, sort of thing.
That's right, and also we've seen, interestingly, for the first time in a long time, we've seen a bit of a spike in the building market in terms of residential building. And I've just looked at some recent figures, and over the last 12 months, building of new houses at the highest level for 8 years.
Gotcha.
It's still quite low compared to what we were doing, 10 or 15 years ago, but there has been some strong interest in building houses as well. So overall, the property market has had a reasonable sort of 6 months.
Good. So with your take here, I'm interested to find out, I personally have an opinion that the market, where it is now in terms of pricing, is similar to where it was in 2009-10. We had a little mini boom.
Yeah.
The government was handing over money left, right and centre. Interest rates went down, everyone had the first homeowners grant, it was boosted and all those sorts of things. So we kind of saw this sharp spike in the market. So are we back to that level, do you think, or we exceeded that level?
I think we've probably exceeded that level, but I think it's I'll be a very brave person to indicate where we're going to go over the next 12 months.
That's my next question.
Yeah, because I think we're still fairly sort of fragile as a local economy.
Gotcha.
We've still got some shakeouts to occur in the manufacturing. We're really not sure where the coal's going at the moment, coal industry, and we are seeing some slight signs of pick up in the services area, but we're still, we're still not really performing as well as we should do as a local economy, as the Illawarra or Wollongong. Unemployment is on the rise at the moment, and it probably will continue to rise, and the national unemployment rate has been forecast to rise. So there's no doubt that we're going to go. So I don't see that the market is going to sort of boom over the next 12 months. It'll probably just be more of the same that we're seeing now.
Okay, so not so much heading into a big boom type of market, maybe more of a steady market?
I think so. I think we've had that little spike and lead up to Christmas. I know that normally it starts to slow down, but I understand the auctions last week were still quite positive and people were still buying up to Christmas. But it'll probably slow down a little over January, February, but I think we're just in for a steady 12 months. We're not going to see those huge prices. I don't think so.
Gotcha. So we've sort of really regained the losses from the end of 2009-10 when the government took away first homeowners grant, interest rates went up and the market dipped. So we kind of go just past maybe that level, and in the future, well, like your crystal ball is as good as mine, it doesn't work. So maybe just steady growth over the next few years.
I think so, steady growth, which is good, is what you want to see. You want to see some return there.
See things too crazy.
No, I can't. And it looks like the US is starting to perform a lot better. They're starting to, their quantitative easing program is starting to be wound back. The dollar's starting to come down, which is good for everything. Particularly for our exporters and things alike. So I think those sort of things at the macro level, particularly in the US, Europe is still probably a bit of difficulty, but even Japan's starting to perform a bit better.
Right.
So you got those international influences sort of getting through what the problems they've had. Australia has still got some issues there as we move from the minerals to the non-minerals, if you want to call it, and transition, and how that flows through. So there's going to be some, some sort of issues there as well. But I think we're in for a reasonable 12 months ahead in terms of economic conditions, and the property market's a key part of that.
Sure. So I guess the key thing for people to take here is that all these things that you're talking about have an impact on people's lives, how they behave, what they do. Like we said, they were sitting on the fence this time last year, so now they're not, they're getting into the market, they're becoming more comfortable, so the consumer sentiment is obviously improving. But these all have a little slight impact on everything real estate wise, because it's a behavior thing. I mean, real estate is a perception, it's an emotional thing, it's how you feel about it, so it's kind of sometimes not mostly about numbers at all, really. It's about, is it the right time for me? Does it feel right? Are we getting married? Like it's circumstantial and all those sorts of things as well.
Particularly with the, you look at the first home buyers, and we certainly, as you know, had a big drop of the first home buyers with those grants taken away and housing affordability, but it looks like they're now starting to return to the market. So that's important. Population growth is quite flat in the region, so it'd be great if we could see more people coming into the region and the region growing, and we've got West Dapto going to happen, and Shell Cove, and there's a lot of investment on the books at the moment, so all that economic activity in terms of encouraging growth and employment, and hopefully the property market's going to come with it.
Fantastic. All right, so what's your take? Units or houses? What's outperforming in terms of, say, capital growth?
At the moment, the units are doing very well. If you look at the pricing of units, particularly in the central Wollongong area, and that's probably a typical the unit market, and the pressures of the university with accommodation certainly impacts on that market. But houses have been quite strong as well, and there's been some spots around the city, if you want to call it. I think the biggest growth that we've seen in terms of median prices has been in that Woonona Pillai area for housing, and then around the lake, and
really?
Lake Illawarra to our flats has been quite strong in terms of medium house prices, and also unit prices as well. I know there's not a lot down there, but there's seen some strong growth in the median price of both those houses and units around those lake suburbs.